Good morning, traders. Welcome to this FXDD live webinar. With me, Chris from Elite Currency. We'll be taking a look at the euro dollar, pound dollar, dollar yen, other currency pairs, and of course, DAX, S&P 500, and gold. So hang in there. But first, the risk disclaimer explaining the fact that trading for exchange and global financial markets are considered high risk. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. So once again, hi, welcome. Let's get started with our webinar. Now, one more thing, by the way, I wanted to let you know you can join the webinars live through these links. You have the live trading webinar link at the top, live educational webinars at the bottom. So check that out for the exact schedule. Scheduling and stuff like that. Of course, you can also go to the FXDD YouTube channel in case you missed anything. It will be uploaded there. All right. With that said, let's close this and let's bring about our screen of the MT4. FXDD MT4 platform. There we go. Yes. Good. So, euro dollar 4-hour chart is showing a range, and if you look at the moving averages, the 144 EMA and the 20-minute EMA high and low, then that's not surprising. It's kind of like price is squeezed in between. The 21 EMA is acting as support, the 144 EMA is acting resistance. From my discretionary point of view, it's going to pop up to the upside, I think, because of the fact that we had momentum up here, or at least some momentum, not fantastic momentum, but some, and prices are going sideways basically like this. So I do think it will pop up to the upside, go up to 114.25, which would be the first target. It's the weekly R2 pivot point level, and it depends on how it's going to break. Is that going to be a sustainable break? Is it going to be a break that shows a lot of momentum and strength? Then it could still continue higher to the round level of 115, the psychological level. If, however, price moves up, but then shows an instant close in reverse like this, I would be a little bit careful. It could still be a pullback, but you got to be a little bit more careful. It could still be kind of completing and maybe a bigger move up, hit the resistance, and we have to see. It could bounce. I don't know. It could be a bigger retracement. It really depends on how fast price rejects to the downside and how it behaves back at support around 113.50, 113.75. There's a little bit of a question mark. It's also a bit too far down the road, but at least you are aware of what the scenarios could happen. What I would ideally like to see is a bull flag at the R2, and then I think there's a good chance of a breakout towards that 115 zone. Okay, so this is kind of like these lines indicate what my vision for the moment, what I'm looking for. I do think that this breakout could be tradable. If you get a good candle, a good 4-hour candle, I think that's something I would be looking for. And a retracement of that candle could be, an entry maybe back at the R1 or close to it. And there is a zone up to R2. The stop loss, if it's a decent 4-hour candle, it could, a stop loss below the candle low could be used. Always a little bit risky, but that is an option, and you might get there could be enough R2R reward to risk ratio there when you look at the stop loss versus the R2 target. Of course, if you want to hang into the R3 or split the trade, those are things to think about. I in this scenario think that's a pretty decent idea to split like 50 at the R2, put the break even the rest of the trade, and aim for the second part, the second 50% at close to or at the R3. We got a 115 round level, so I would probably go below 115 and maybe 114.70 ish. Just to give it a little bit of space. All right. Anyhow, that's the upside target. Downside, if price were to break below the 21 EMA and the weekly pivot point and this support zone here, is possible, but not a big fan of it. Let's put a fib like this. If you get a break, then there might be space. It depends on how it breaks. If you get a break like this, a good breakout candle, a very strong breakout candle with the close near the low. You get a pullback. There could be a chance that it could fall deeper. I don't like that idea at all, though. I'm just saying that is a scenario, but I don't, I'm discarding that right away. My personal view. I don't like the downside. I do like the upside. I'm just warning of a false breakout. So you got to be realistic about that. That's all I'm saying. If you want to be more cautious, then take the bull flag break and then the break above the R2, in my view. I don't like the downside. I think it's going to run into these fibs, and I think that these fibs are potential support and bouncing spots. So I'm not a big fan of that, and I would rather wait for some bullish candlestick patterns at these fibs for upside reversal signals, in my view. I'm bullish just because of a couple of things. Wait, now there are a lot of lines. 1 second. Let me renew the template. It bounced off 112.50, which means basically more or less we got a double bottom. And we have patterns here, ABC, ABC. So those two things, I think, lead to the fact that there could be an ABC as well. We had bullish candles here running back into 21 EMA. And so this bearish swing is over. Okay. And let me make that more clear. This one is over. So we are looking at a new swing. Well, whether this is, of course, a pullback for more downside, it's possible, but I would have to see a very clear, very strong daily candle. Looking at an 80 pip size at the very minimum, close near the low. It has to be a very dominant breakout candle, in my view. So leaving no doubts about that. Close preferably into this zone or below this level, 112.30, 112.50. But looking at, we had some wicks here, so retracement was possible. But so far, yesterday was a bullish candle, although small. So yes, unless we get a daily candle that's clearly bearish, I'm not looking for that. Just to recap, if we get small bearish candles, I think it's just a retracement from our upside. And if you have a daily candle close above the 21 EMA high, I think that could be a breakout, and look for a retracement of that candle, of that daily candle, and look for continuation up to 115. That's what I am thinking at least. All right. So of course, up to you. What you decide. When I say you, I'm just talking about, in public in general, or just like a general phrase. That's my view. Daily candle close above the 21 EMA should trigger that upside, that bigger correction, that bigger move up. But doesn't have to be the entry. A retracement of that daily candle could be better. All right. Now, yesterday's candle already gives us, I think, a good sign that we might get that upside. Let's see if we get a 4-hour candle to confirm that. All right. So that's the euro dollar. I spoke a lot and long about that. Sorry for that. But let's move on now. Let's take a look at this pound. It is very bullish because it had a clear swing to the upside here and correction downwards. And price bounced off the 50 fib here, roughly 50.61.8 fib. Broke above this resistance trend line. Moving averages are aligned. Broke upside, pulled back into the 21 EMA, bounced at the 21 EMA, and then broke above this resistance trend line. Now it's at the R1. All right, so this was a good breakout. This was a breakout candle. This one, this one, this one, all of those, any of those four really. Now price is right at the R1. So what we're looking for, I think, is a clear kind of close above the R1, and that could indicate the breakout. But we have to be aware that this is momentum, and we're not sure if that momentum will necessarily continue up to R2 or R3. R2 is around 132.50. That would be the next target. So we're kind of hanging in the air here, and difficult spot. Better breakouts were these candles, all right? But that's past us, so we can't do anything about that. You traded either, we traded it or not, and if we didn't, we have to wait. If you did, you can move it to break even, I think, by the way, in my view, or I would move to break even if I did trade that. I didn't catch this myself. And we have to see how this price responds to the R1. It could be, depending on how this candle reacts, it could be a moment where price retraces a little bit, makes maybe a flag on the 1 hour chart. All right. So far, it doesn't look like that. So if it doesn't, then you get a good 4-hour candle that closes above the R1. Might be something to think about upon a retracement, maybe back into 131.40, 131.40, 131.25 zone, maybe for upside continuation. All right. Let's take a look at this dollar yen now. This is a very high time frame. 1 second. All right. So we got a breakout, but then 3 candles indicating retracement. So it is an uptrend. Breakout was a little bit awkward, but it is above the weekly pivot point. It is, the moving averages are still aligned to the upside. Prices above the 21 EMA. I wouldn't trade it right here though. It's a little bit like a closing reverse, so that makes it a little bit awkward. But I wouldn't exclude the upside. What I would probably look for is a break above the R1 and the 21 EMA. And I'm not sure if I would trade it right away then. I would probably wait for a break, maybe a flag rather, and then a continuation, a breakout above the flag. All right. Pound yen. All right, let's see. Theta candle clearly giving an uptrend here. And this is something that we were looking at in our live ECS live channel, right? Is this flag and a continuation, and the fact that it also reflected very similar to pound dollar structure. So no need to trade necessarily, in my view, two pairs that are so close and similar, because it's kind of risking the same spot, the same kind of moment. You could split the risk maybe on both of these, or do take a normal risk on both, but you got to be aware that they are pretty similar. So we had a kind of a flag, we had a bounce and breakout. This was the breakout candle. This was the bounce structure, the bounce pattern. So yes, we had a break above this flag here, as you can see, breakout here, break, flag, another break is coming. Price is already above the R1 in contrast to the pound dollar. So bounced off the 21 EMA here. So it might be ready for trade to the upside. You know, this is like 50-50 territory. It could work. It might fail. We were right in the middle of a momentum. So yeah, it's doable. It's just that, you know, situations where prices made a flag like this are better, are nicer, are more structured to trade. Here we're right in the middle of momentum. There is some wick here on this candle. It is, you know, just generally speaking, more risky. So yes, follow through possible on the 50-minute chart, but you never know. This could just go sideways for a while and you know, make the consolidation bigger or make a retracement even down to the 144 EMA. It's 50-50 really. If you want to increase those odds, I think you got to wait for a new kind of flag on the 1 hour chart, in my view. Price that goes sideways like this, right? And then breaks to the upside. Otherwise, a 50-minute setup, well, it has its risks, right? It's possible. You know, one thing might be better. One pattern might help is that if you get on a 50-minute chart some kind of break like this and a 5-minute flag, for instance, that retraces a little bit, so you get some break already on the 15 flag on the lower time frame on the 5, and then the break of that flag. Then at least you know that price is above the top and you're in a momentum to the upside. Because at this point, we don't know if this is just a consolidation, a bigger consolidation, or price is really going to break to the upside. You know, it's a coin flip at this point. So really no. So if you wait for a 1 hour flag, I think you're safer. If you wait for a clear break on the 15, wait for a pullback on the 5, and try to catch a small continuation on the 5, that's risky. It's a little bit scalping, but at least you have that break already. Same thing for the euro yen. I don't know if I want to repeat everything here, but euro yen is very similar to what looks like the dollar yen. Yes, indeed. It too, I think, break above the 21 EMA and the R1 weekly pivot point, and then look for a flag. In my view, doesn't have to be the hourly chart; could be lower time frames. All right, Bitcoin is really falling asleep, going sideways here for a very lengthy period of time. 2 months, basically, just in a very narrow range. Looks like a wave 4. One more lower low, I think, is likely, and the next lower low could be a bouncing spot for upside finally. But it's very slow, low volatility. Hang on, folks. I'll take a new chart because it doesn't seem to open up. Let me quickly get gold. 1 second. There we go. All right. Yeah, so we had a reaction at the 88.6 fib, which we were analyzing for a while. Maybe you know that these fibs, the 60s, 61, 78, or 88.6 fib could be reactions. And last week we had a wick at the 88. That was a lot better reaction than this bullish candle. We had on the daily chart a clear pin bar followed by a bearish candle, now going sideways. So this, to me, looking like a reversal, clear momentum correction that was unable to break above the 21 EMA and is now already potentially breaking through this support. So if you get a bearish candle that can close below that trend line and fractal, you got the price below the 21 EMA. It is a counter trend one because it's going in against the direction of the 144, but with the wick on the weekly, with the daily candlestick patterns, with the momentum on the 4-hour chart, followed by a pullback that can't break above the 21 EMA, followed by the follow-through continuation here, I think there's a pretty fair chance the price will get down to the R1, maybe R2 here as a bigger correction. In fact, it could go even further. To give you the bigger picture, this could be the end of a wave D, and we might get a 3-wave correction. This being a wave A, B, C is even possible. All right, but that's higher time frame. Let's take a look at that dollar CAD. Let's do that. If you have any particular favorite, of course, let me know. Let's see. All right. Let's put this fib on. Okay, so we had a bounce at the 38 fib, the 50 fib, the 61.8 fib, and the 78.6 fib. All of these fibs were used, but just for a bounce, not for a reversal. We had some upside here, a little bit of upside here, and now we're getting upside too. But of course, this might be a bigger reversal rather than just a retracement. And price is challenging a resistance trend line. Excuse me. From a bigger time frame perspective, this is a 3 swing down, 1 swing up here. Looks like that this could be up, correction up, maybe to minus 272 target, 134, or minus 61.8 target, very close to 135. Yesterday we had a very clear bullish candle. So with the small wick at the bottom, clear, in my view, bounce off the 78.6 fib. Question is it good to trade right now? And with that trend line, I'm not sure. I don't think it's a great moment for that. And not sure which time frame I would use for the breakout. I would maybe even lean towards the daily candle. I know that's slow, maybe boring, but I just don't think it's a good spot right here when 32.50 close by. I think there's a fair chance it will make this upside. But how to trade it, I don't see any moment, any particular trade at this moment, unless it maybe retraces. If it does bounce here, it does make a retracement into this head and shoulders, inverted head and shoulders level, left shoulder, head, or right shoulder, then that could make sense. Or a daily candle that can really break above the 132.30 zone here. Look for a flag, I would say, after that tomorrow, and a continuation breakout. So something like this, maybe. Today's bullish, with that today's daily candle would show that with the close not too far from the high. Flag tomorrow on an hourly chart, and a continuation like that. Otherwise, I think this would be also an option. Basically, that's my view, at least at the moment. Other than that, let me know if you have any follow-up questions. Of course, you can always use the chat, as you know. And well, what else? S&P 500. I promised. I think that I haven't used this particular profile in a while, so that's why it's not reacting. Let me go to the DAX and S&P 500. Do you have any particular pair in mind other than that? I think that this is a bouncing spot. We could pivot point 21 EMA. We're in uptrend here. Moving averages aligned. Clearly broke above the previous high. We could be looking at a zigzag pattern with A, B. This could be an ongoing wave C. And so this could be a bouncing spot, in my view. And there could be a retest of the R2, maybe the R3 even, for continuation of that. That's my view on the SP on DAX. Sorry, S&P 500. But generally speaking, I think that the upside is a correction. S&P 500, same thing. It might push higher, but ultimately, I think it's a correction. And if we look at this, we had a slow grind up here, very quick move down, momentum, correction, momentum. And this seems to be slowing down a little bit. It seems to be making a little bit of a rising wedge, slightly, very slightly. And I think that it might push up for one more higher high and follow the DAX a little bit, or the DAX follows the S&P 500, anyhow, move along with each other. But after that higher high, or maybe if it breaks below the 21 EMA, I think there could be a bigger retracement here. Not necessarily breaking this bottom, doesn't have to, but some retracement. Let's take a look at Euro Pound. My bias is bullish just because of the fact that, well, a few things. Okay, you have, it looks a little bit like an ascending wedge. We got, also the trend is in my view, up. We have momentum here, momentum here, momentum here. And this looks like a correction sideways. So for the moment, my view is up. And price, the moving averages are aligned. Price used to be above the 21 EMA. Now it's making a little bit of a, trying to break below it, but still alignment is there. On the weekly chart, we see that too. Same thing. And let's put a fib from here to here. And price is moving lower, but it's approaching, I think, a support zone. These bottoms and these fibs, 85 could be a bouncing spot, for instance. And price, in my view, could be completing maybe some zigzag A, B, C, for instance, could be a bouncing spot for upside. So daily chart. So let's put a marker at 85. And the 78.6 fib. Let's take away this fib. There we go. So a lot of choppiness, a lot of correction, pretty difficult movement here, pretty difficult to trade, in my view. And I would not think that downside is that great. Maybe if it breaks this bottom. Four-hour chart here. That could be different. But, and there could be maybe some space between this 86.15 and 85.20, 85 level. This zone right here. Pretty small. I would not be interested in that. I would maybe, the most interesting thing I think is a potential bounce at 85 for upside. And candlestick patterns that confirm that upside. So that's probably my, the most interesting thing I think at the moment that I see, at least. Yeah, it's I think a tricky chart. If it breaks below 85, of course, something else might be taking place. Maybe a bigger correction here. If it breaks again above the 21 EMA, maybe, or at least above 91 here, some space maybe to 95. It's a difficult time, difficult chart, I think, at the moment. 1 hour chart is running right into the previous bottom. So yeah, maybe if it breaks that bottom, look for a flag on a lower time frame, break of that flag down to 85, 85.25. That could be, a major bouncing spot again. So those are my thoughts on the euro pound. So I think that's about it for the moment, folks. Thanks for all joining. And once again, if you're looking for live webinar, for videos and webinars in general, you can check out the FXDD YouTube channel. And if you're looking for live webinars, as you can check out this link. One second, it's no, wrong one. Sorry about that. Yeah, finally, good. There we go. These links, top one for trading webinars and the bottom one for education webinars. Above all, wish you great trading, lots of success with those choices, and see you all very soon. All right, cheers.